Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at some financial results. Firstly, of First Citizens Group financial holdings for their 6-month fiscal period ended March 2023, as well as Unilever Caribbean Limited's or UCL's full year 2022 results. Both groups would have had differing performance in terms of headline numbers. Let's take a look at what investors would have seen and what they can expect in the coming months ahead. Turning firstly to FCGFH or First, the group would have recorded a earnings per share figure of $1.45 per share, which is a 9.8% increase from that $1.32 recorded in the prior comparable period. Driving this performance would have been an increase in net interest income of a whopping near 20% from $723 odd million to just about $867 million. Total net income also up 10.2% from $1.06 billion to over $1.17 billion. Overall profit after taxes would have increased that 8.7 odd percent from $335 million to just about $364 million. So certainly, First Citizens moving in the right direction over their comparable fiscal half years, certainly over 2023 versus 2022. Driving this performance, again, when we take a deeper dive into it, in terms of profit before tax, we could look at retail and corporate banking, traditionally their largest segment. That would have contributed or grown rather just about 11% from $436 million odd to just about $484 million period over period. The treasury and investment banking in that green segment would have grown a fairly substantial 40% from $282 million to just under that $400 million mark, $396 million to be specific. Their trustee and asset management segment, typically the smallest segment in terms of PBT by business segment, would have declined marginally from $28 million to $25 million. Overall, however, profit before taxes, before eliminations, certainly moving in the right direction and getting back to that pre-COVID type level. And when we take a look at trailing earnings per share for First Citizens, we can see that certainly that trend from the half-year period of 2021 to the current period of half-year 2023 on a trailing 12-month basis would have certainly been positive and in the right direction and returning to those pre-COVID levels of $3.04 in the half-year 2023. Again, trailing 12-month earnings versus that $3.02 trailing 12-month earnings that would have been observed in the half-year of 2020. And with that, there has been a moderation in valuation, making the stock relatively more attractive, both on a historical basis to its own historical trading multiples, as well as relatively to the banking sector. So pre-COVID, for example, First Citizens would have been trading at the half-year mark at just about a price-to-earnings ratio of about 12.7 times compared to its current level of 16.5 times. So at the last price of $50, again, that price-to-earnings ratio of First Citizens is at 16.5 times, which is above the sector average currently of 13.6 times, offering investors a fairly generous dividend yield relative to the banking sector of 3.3%. And again, that banking sector average is 3%. Keeping in mind that increased net interest income, those credit impairment reversals, but of course with one eye on those elevated valuations relative to the banking sector, Bourse is going to maintain a market weight rating on First Citizens for the time being. Turning quickly to Unilever Caribbean Limited or UCL, the group would have recorded a full year earnings per share figure of 57 cents, which was a 95% decline from the fiscal 2021 figures of $7.19. Now take this with a grain of salt, or more than a grain of salt, because there were some very significant one-off gains that would have been recorded in fiscal 2021 associated with overall restructuring. In terms of good news, revenues would have increased 9.8% from $233 million to just about $256 million. Gross profits fairly stable or a marginal decline in terms of absolute figures from 106 to 105.2 million. Overall profits for the period would have declined 42.3% from 16.9 to just about 9.8 million. Again, when we take a look at those revenue trends, well, it seems to be moving in the right direction from fiscal 2022 over fiscal 2021, recording a 9.8% gain in revenues. Overall, as we can see, revenues have been somewhat choppy. And again, this is to be expected to some degree, given that Unilever Caribbean has been going through somewhat of a transformational period with restructurings and various asset sales over the past few fiscal years. Now, when we take a look at UCL's profitability, we're going to pay attention to the gross profit margins and operating profit margins in green and blue respectively. We can see that UCL's profit margins have, from a gross profit perspective, have declined just marginally in fiscal 2022 to fiscal 21. That is to be expected to a degree given higher input costs from a very aggressive inflationary environment over the course of 2022. That is expected to moderate to some degree as we move further and further into 2023. Importantly, however, operating profit margins have been relatively robust and in fact increased from 2021 to 2022, moving from 10.9 to 11.2%. So certainly moving in the right direction, and we do expect and anticipate some improvement in normalized performance as we move into 2023. First quarter results for Unilever is going to be very instructive for investors to guide sentiment and overall market valuation. So at a price of $15.75, the current P ratio is 42.6 times. Again, take that with a grain of salt, given that there have been some significant restructuring and associated costs in 2022. And again, a very robust dividend yield of 17.8%. But again, there was some very significant one-off or exceptional dividends paid for the period fiscal 2022. So with higher revenues in mind, keeping an eye on those elevated valuations, which we expect to normalize, those attractive dividends, again, which we expect to normalize, and recurrent performance, which again, we do expect to see some improvement as we, again, keyword normalize, see some normalized performance for UCL versus maintaining, for the time being, a market weight rating on UCL. But that's it for this week's edition. For more information, you can give us a call at 226-8773. Email us at invest@boursefinancial.com. And of course, you can check out our website, boursinvestment.com, where all of our research is absolutely free, and catch our article in the business section of today's Trinidad and Tobago Guardian newspaper. Stay safe, keep investing, be productive, and we'll see you next time on the Bourse Report.